All right, let's jump right in. Today we're looking at a headline about Bitcoin that sounds, well, completely contradictory. The healthy dip. What does that even mean? Let's break it down.
Okay, so right out of the gate, the story hits you with this, a sharp drop. You know, the kind of news that immediately makes your stomach clench a little bit. It's designed to grab your attention, and usually not in a good way. And it's not just any drop. The source points out it's below a major psychological threshold. Think about that for a second. When a price that's been climbing and climbing suddenly falls below one of those big, round numbers that everyone watches, yeah, that feels like a big deal. It definitely makes you sit up and pay attention.
Okay, so we've got the scary part down, but here's where things get really interesting. It all comes down to the language being used here. The specific words they chose are everything.
See, they don't call it a crash. They don't call it a collapse. The word they use is retracement. So, what in the world is a retracement? This one little word is the key to this whole thing.
Well, here's the deal. A retracement is basically a temporary pause. It's a reversal, sure, but it's going against the main, bigger trend. I love this analogy. Imagine you're hiking up a really steep mountain. You can't just run straight to the summit, right? You've got to stop, catch your breath, maybe even take a step or two back to get a better foothold. That's a retracement. It's just a breather on the way up.
And this is where the story takes a really surprising twist. We're about to get to the one word that completely turns this whole scary price drop idea upside down.
Get this. The source calls this drop healthy. Yeah, healthy. I mean, how can a price drop, a big one at that, be a good thing? It sounds totally backward, right? And that's the puzzle we're trying to solve here.
So let's put these two ideas side by side. On one hand, you have a market crash. That's all about panic. It means people think something is fundamentally wrong and things are headed down long term. But a healthy retracement, that's totally different. Think of it as the market letting off a little steam. It helps get rid of some of the wild short-term betting and stops the bubble from getting too big too fast. It's like the market is building a stronger foundation before it keeps climbing. It's a breath, not a total breakdown.
And that phrase right there, healthy retracement, it just shows you how powerful language is. This source isn't screaming disaster. They're basically saying, hey, look, the market is doing exactly what it's supposed to do. It's correcting itself so it can keep going.
All right, let's pull back and look at the big picture here. What does all this actually mean for you? What are we supposed to take away from this?
Okay, so here's the bottom line. First takeaway, a price drop isn't automatically a disaster. You've got to look at the context. Second, when you see that word retracement, it's a huge clue that this might just be a temporary dip in a much bigger climb. And third, that word healthy, that's the signal that this isn't a bug, it's a feature. It's the market keeping itself from getting too crazy and overheating.
And all of this leaves us with the million-dollar question, doesn't it? In a market that's all over the place, how can you or I tell the difference between a healthy pause and, well, a real problem? Because when you're in the middle of it, that's the only thing that matters. And that's definitely something to chew on the next time a headline like this one pops up on your screen.